We have a market call minute coming, but before then, all sorts of questions lined up here. Here's Nick in Toronto. Go ahead, Nick.
Thank you for taking my call. Last week I bought VRX, and since then, that thing keeps going down. Is it time for me to cut my losses and see somewhere else, or should I keep the stock?
Well, certainly a lot of fundamental things going on with this company right now.
Yeah, there are a lot of fundamental things. I'll just take it from a price perspective to begin with. This has been a leading group for some time. Valiant behaved very well. It has been underperforming recently. I use a type of chart called a point and figure price chart. This stock has just broken down out of a pretty significant price pattern. I would be very careful here. You know, it's sitting above the 200-day moving average still. If it breaks the 200-day moving average, you know, it could get hit pretty hard. I would be a little bit careful here.
Thank you, Nick. Here's Leonard in London, Ontario. Hi, Leonard.
Hi, David. I'd like your opinion on Canadian Energy Services and whether you would buy it at this price. Thank you.
So I guess we have to ask the question every day, if I own a stock, would I buy it today? And I think the answer has to be yes for you to continue to hold it. This is a stock that we own. It's a company that feeds well into the growth in production and growth in finding and lifting oil and gas. Canadian Energy Services does cleanup around camps and drill sites, and their business is booming. We own the stock. How high can it go? Well, you tell me when the boom comes to an end. But in the meantime, this is one I think that is very well situated to take advantage of it. It's not a big market cap. It's $2 billion. So recognize, you know, it's a little riskier than some of the bigger plays, but we think it's really well managed, and it is one of the positions we have in the energy services space.
Thumbs up, Leonard. Here's Alan, who is in Wellington, Ontario. Good evening, Alan.
Good evening, Mark. How are you this evening?
I'm very well. Thanks for asking.
I'd like to ask your guest about Suncor and what he feels about that for the future.
Sure. So, Alan, we were focused in the growth producers in the U.S. for E&P companies, and we were focused in infrastructure and focused in services. In the last 4 months, we've built a pretty significant weight in the heavy oil companies in Western Canada, specifically because what's happening is the bottleneck in getting the bitumen and the oil from Western Canada to market is starting to debottleneck a little bit. We produce about 4 million barrels a day equivalent in Canada. By the end of this year, they'll be moving about 800,000 barrels a day to the Gulf of Mexico. So the differential between Western Canadian heavy oil and WTI is narrowing, which is a good thing for companies like Suncor. So I think you could buy the stock. We're more focused in CNQ, Canadian Natural Resources, because they also have a very big natural gas business. And of course, that's benefiting them as well. But either company is one that I would buy here.
Here's Ron. He's in Richmond Hill. Hi, Ron.
Good evening, gentlemen, and thanks for taking my call.
Sure.
Mr. Burrows, I really appreciate your take on the markets. It's very fascinating. I'm calling about potash. I initiated my position at $29 when they had that news come in on the cartel. Where would you see as a good point to maybe fill the other half of the position? Thank you, sir.
Okay. So, Ron, you know, you're braver than I am stepping in like that at a break point. Good for you. You're making some money. Stock has been working its way higher over the last 6-7 months now. I guess 8 or 10 months. Two things. One, to be a little bit careful because price of both wheat and corn have been weakening over the last little bit. But this seasonally is when you'd want to own this potash. Stock's pulled back from 37.5 into some support at the 50 and 75-day moving average. If you like it, this is where you would add to it. I don't think this is my number one sector. I'd like to see the grain pricing a little bit better. But that being said, it is slowly working its way higher. So if you own it and you wanted to add to it, I'd add to it in around here on this pullback it's had in the last couple weeks. Here's
Peter, who's in Shediac, New Brunswick. Hi, Peter.
Thanks for taking my call. Can you please give me your thought on Gilead Sciences? Thank you.
Okay. So Gilead Sciences is a holding in our accounts. This is obviously not a yield-generating name, but it's a growth name. We really like Gilead because it's got a growth rate that's roughly twice what you see in the ethical pharmaceutical companies, but it's trading at a multiple that is about the same as the ethical drug companies. So Gilead's stock got hit when the biotech ETF sold off, and when you sell off an ETF that's very widely held, it impacts all the holdings within the ETF. Gilead probably higher quality than most. So this is one that I think that you can buy. There's near-term catalysts over the next year that could be quite positive for the stock. The group is a little bit extended. It could consolidate a little bit, but I think Gilead and Biogen would be the two that we really like.
Thank you, Peter. On to Gus in Edmonton. Old school pharma here and medical products. Go ahead, Gus.
Hi, fellas. Thanks for taking my call. I'm interested in J&J and this behemoth company that I think is a really well-run company. I love its product line. I've always liked the company. I've been in and out of it for a number of times. But I'm wondering about the future outlook. If you see organic growth, if you see acquisitions, or just the future outlook of Johnson & Johnson, I'd appreciate your thoughts. Thank you.
So Gus, if you think about why somebody's going to invest in a J&J, if you're a front end of the baby boom and you're 60 plus and you're looking over time to generate some cash flow from your investments, maybe for some income replacement, you could buy a treasury at 2.5% yield, which will not go up in yield after you bought it. Or you could buy J&J stock with a 2.7% dividend, get a little bit better tax treatment. You'll probably see the dividend grow 7-8% a year as you go forward. Stock's generating about a 22-23% return on its equity. It's a global brand that is unlikely to run into an enormous problem. It's got a rock-solid balance sheet. This is, again, it's not rocket fuel. This is just a very sound long-term investment in a sector that is one that is seeing money get put to work. There's a secular theme behind it. You've got an aging baby boom, and around the world you've got countries that are needing to build social safety nets. So I think J&J is a great long-term investment. Again, it's not gonna rock and roll. This is the idea. This is a solid conservative investment.
All right, tons of questions are rolling in for you today, and we've put a bunch together in the Market Call Minute. Bill in Fraser Valley, BC, he called in about IGM Financial.
Okay, IGM in the asset management group is not the top performer in the group. We really like the sector, and ultimately they probably get this right. Stock's been pulling back. They're going through a restructuring in the business. I'd like to see some positives on the numbers come before I buy this one. I'd rather buy a CI.
Norm in Ottawa called in about Air Canada.
We like Air Canada. It's a big holding that we have. Airlines have pulled back a little bit in the last couple of days on some concerns around things going on in Europe. Air Canada's got new capacity coming on. They're doing a good job of managing it. I'd buy the stock.
Glenn in Vancouver on Keyera. I'm guessing you hold this one.
Yeah, top 5 holding in the firm. If you like natural gas, and we do, volumes could continue to grow. You'll continue to see 5 to 10% dividend growth. And these companies have lots of opportunity to build new infrastructure with great economic returns. We like this sector.
Audrey called about Freeport, McMoran, copper, gold. Yes, no?
Well, while you may see a trading bounce in gold, you're seeing things go the other way in copper. We continue to be quite bearish on copper. Stocks are not performing well. I'd be very careful. Outside of a reversal or a retracement rally, it would be a short-term trade.
And just a quick thought on Cisco. Richard called in about this one. Is there enough growth there for you?
I'd put in the old tech group, and this is about balance sheet and cash flow, and we're seeing some spending being done by corporations. I think that you do okay here.
But you don't hold it?
We don't own it.
You don't. Okay, that's the Market Call Minute. Back with the top picks of Mr. Burrows right after this.